You're about to hear my conversation with Tyler Hewlett and David Taylor, the two new members of the Mackenzie Bluewater team. We talk all about how they got interested in investing, their new next-gen fund, how they approach that universe, and what you can expect from that investment. I hope you enjoy. This podcast is for informational purposes only. Information relating to investment approaches or individual investments should not be construed as advice or endorsement. Listeners should seek professional advice for their situation. Welcome to the Mackenzie Investments Podcast. My name is Matthew Schnurr, and I'm delighted to be here with two guests today. Tyler Hewlett and Dave Taylor are two members of the Mackenzie Bluewater team. They are also co-leads on the Mackenzie Bluewater Next Gen Growth Fund. Tyler, Dave, welcome to the podcast.
Thanks, Matt.
Thanks, Matt. Happy to be here.
Look forward to the conversation today. I always think it's very interesting to understand a little bit about your background, how you were interested in investing. Tyler, maybe we'll start with you. How did you get interested in investing, and how did you get to where you are now?
Sure. So I've been interested in the investment industry as far back as I can remember. If I had to pick kind of a moment where it started, I grew up in Pickering, Ontario, which for those who don't know is a suburb just east of Toronto. I remember when I was a kid, my dad bought me my first stock, which was ClearNet Communications, which as far as I know is the only public company ever to be based in Pickering.
Right.
And that kind of started from there, watching the stock, watching other stocks. If you fast forward from there, I went to Queen's, where I did my undergrad Bachelor of Commerce, focused mainly on finance. And coming out, I landed my first job out of school with kind of a well-regarded rotational program, a large Canadian bank, in their capital markets arm. So it was a great experience. I rotated through investment banking, foreign exchange, fixed income, spent some time in their London, England office. And then landed permanently in equity research, working with the firm's chief strategist for a number of years. So after that, I realized for my career going forward that I wanted to be in a position to actually invest instead of advising others on how to invest. So,
Right.
Moving from the sell side to the buy side, if you will. That brought me to an opportunity in the investment management arm of another Canadian bank. And interestingly, it was in Canadian small cap. It was on the Canadian small cap team. Not an obvious path, kind of a 180 going from macro investing to small cap.
Sure.
But when I decided to join, it was kind of pitched to me as you've got this macro experience, which is actually pretty rare and pretty unique and important as a portfolio manager. But eventually you have to learn how to pick stocks to be successful. And that Canadian small cap was kind of a great stock pickers market, got a really bad benchmark. It's an opportunity to add value through pure stock selection, and a good place to learn the craft of stock picking. So eventually I took over as the lead manager of the small cap team, and that's when I hired Dave to work with me over 10 years ago. About 8 of those years, I'd say, so Dave started working under me, but for about 8 of those years, I considered Dave a co-manager on all the strategies we ran together. It was the start of a great partnership. It got to the point where we were co-managers. And for the next 10 years of my 15-year career, we managed several different mandates. It ended up going beyond Canadian small cap, North American all cap strategies, some large cap portfolios. I led what became known as our growth equity team. We ran multiple award-winning strategies. By the time we left, all of our products were 4 or 5 stars. And to bring us to where we are today, we did it by adding value through concentrated stock selection. Very similar to the Bluewater team that we joined in April of this year.
Great. We'll get back to how you view the universe and select stocks and the addition to Bluewater. But Dave, why don't you take us through a similar experience, maybe up until the 10 years that you joined Tyler? How were you interested in investing, and what has the experience been like since joining Tyler?
Sure. Happy to do so. I mean, maybe I'll start that there's an old line that if you can find what you love in life and your passion, I mean, you never have to work another day. And with investing, I mean, I truly believe I found that. I mean, it's competitive, it's intellectually stimulating, requires a strong temperament. I mean, it just really resonated with me. So, going back, I'll tell a similar story to Tyler. I mean, my parents bought me my first stock as a teenager. It's so ironic that it was Trojan Technology, which is a ultraviolet water disinfection company based out of London. It actually ended up in Danaher, which is ironic because it's a large holding across the Bluewater franchise. But similar to Tyler, went to business school. I knew I wanted this career on the buy side and investing. I just loved it. I spent a few years at a high net worth investment boutique in Toronto. And then 6 years writing research on the sell side. I covered a number of sectors. Was so fortunate to just have amazing mentors along the way, which is just so important for young people. And then, transitioned to do a bank asset manager, started working with Tyler and, it's just been a great partnership since coming together. And, was a PM on a number of kind of 4 and 5 star funds, Lipper award winning. And yeah, it's just been a great partnership and journey.
Excellent. And the two of you decided to join the Mackenzie Bluewater team earlier this year. I'm curious, Tyler, I think you sort of tipped your hands a little bit when you were talking about similarity in investment process and style. I'm curious, what was the appeal of the Bluewater team and how that integration has gone?
Sure. So I'll start. You can kind of break the reasons we joined into 2 main buckets. The first is Mackenzie specific. The second is more specific to Bluewater and the alignment. I'll take the Mackenzie part. I'll let Dave talk about Bluewater. So, for me, after working for the first 20 plus years of my career at Canadian banks, it was important to me that for the next step in my career that I joined a successful asset manager. So a company was in the business of just asset management. And when you think about the Canadian asset management space, there's very few companies that have the track record and the pedigree and the reputation of Mackenzie. So that was definitely one very important draw. And then, people are always important. When I think about the people I've met throughout my career in the Canadian asset management space, the people that I knew that I had worked with in the past, that I met that were involved with Mackenzie, they were very strong, competent investment professionals. They were good people. And they had really great things to say about working at Mackenzie. And I think all of that played a really important role in the Mackenzie part. And Dave, if you want to talk maybe about some of the more things specific to Bluewater.
Sure. I mean, in terms of Bluewater, Matt, it really started with, a similar investment philosophy. And Tyler touched on some of this, but, being concentrated, benchmark agnostic. We all subscribe to this mentality where 70 to 80% of companies out there are average. We're truly looking for exceptional. Second point would be a track record. We all know this, just a phenomenal track record of adding value on a risk-adjusted basis across the Bluewater franchise over a long period. And then lastly, but certainly most importantly, is the people. That starts with David and Dina, the whole Bluewater team. And then, very important to me was Tyler. Him and I, and I'm sure we'll get into this, we've made thousands of decisions together. So just the journey to continue that partnership.
Yeah, I'd love to dig a little bit deeper on the partnership. It's unusual for me to have 2 guests on the podcast. I think it's fairly unusual for 2 people to join an existing boutique and get amalgamated into that boutique. Maybe I'll start with just your partnership. What makes your partnership special, unique, or important to the 2 of you?
Yeah, that's a great question, Matt. I think when we look back, one of the most important decisions we made early on when we started working together was that out of everything we did, we put the team or the partnership first. So ahead of ourselves in pursuit of one goal, which was to add value for our clients. And it sounds easy. I think everyone probably says that. I think it's a lot harder to do in practice. I've seen a lot of teams and partnerships struggle and fall apart in my experience in this industry, because everyone was looking out for their own career first, even if they didn't explicitly know that they were doing that. So that was first. Everything was kind of team and partnership first, whether it was just Dave and I, whether it was us working as part of a broader team. So what does that mean? Well, first of all, it's you got to take the ego out of it. It takes a level of trust that if the team succeeds and the team thrives, that it'll end up being positive for all members as individuals as well. And there are kind of a few little rules that we over the years crafted. I can't say we came up with them all at once, but over time we kind of looked at what worked and what didn't. And one thing, for example, was when we're debating investments, don't try to win the argument, focus on getting the decision right. And again, when we were part of discussions, when we watched other team members as part of these discussions, we saw a lot of debates that were it was very clear that people were trying to win the argument. And I probably did it myself. If you want me to be honest, I probably caught myself doing it as well. And we decided that if someone, that it was a good rule, that if someone says something that makes sense, even if it's different from what your kind of entrenched position would be, just acknowledge that and move on. And we just found such a huge difference in how constructive the discussions became and how it just helped us more quickly get to the right decision and the right answer. To bring it back, quite a ways. Believe it or not, Dave and I used to listen to this podcast before we even thought of joining Bluewater. I remember a discussion you had with Dave Arpin, our new teammate at Bluewater, where he said something to the effect of, the quicker you can realize that you're wrong about something, like something to the effect of the less harm that will do to the portfolio. And I think a really important part of that is it's quicker to come to that realization when there's not going to be finger pointing as to like who made the mistake, who was wrong here, because it doesn't matter. Again, you win and lose as a team. So we really strive for a culture that has that kind of emotional intelligence. I think that's really important in the investment industry in general, because I often say that when you're dealing with active equities, when you're an active equity manager, you're really in the business of decision making. And understanding your behavioral biases, having the self-awareness of those biases, I think is really important. And then to tie it all into Bluewater and how the transition's gone, to Dave and I joining and contributing on all of the existing portfolios, as well as launching the new Mackenzie Next Gen Growth Fund that we're talking about today, is that when you have that mindset that we've conducted ourselves with for the last 10 years, we're then joining a Bluewater group that has a small number of people that have been together for a long period of time and have had a lot of success together. And it's not, you could see how it might not be the easiest thing for two kind of new people to join into that group. But given the way we've operated in the past, it's actually been really easy. It's been really seamless. It's been a great experience by all accounts. And again, I think it really helped that not only do we have a very similar investment philosophy, which we'll talk about, but that our way of operating as a team has helped us fit in really well as well.
Great. Dave, anything to add?
Matt, the only thing, Tyler hit all the points. No ego, just getting at the root of what a true partnership is. The only thing I would add, and Tyler and I have talked a lot about this, but something that really resonated with me in the right partner is we're both process guys. That sounds simplistic, but being a process guy, every year we sat down and it was about what went right, what went wrong, and that mentality of constant improvement. And yes, the markets are not linear. There are ebbs and flows, but sitting down every year and where can we make structural improvement in our process, which is really getting at the root of what compounding is. Iterating and making yourself better every year.
Right. I'm curious, you mentioned a lot about emotional intelligence, call it corporate culture or something along those lines. When you talk about the successful partnership, you've made the decision to join Bluewater. You've pointed out certain attributes of that. In your vetting process, when you were thinking about joining that Bluewater team, how did you try to understand the corporate culture of Bluewater as it existed and that it would be a good fit for the two of you?
Yeah, it's a good question. The first part was from a vetting perspective. there weren't many places like Mackenzie that we would have left. We were pretty happy in our previous roles. We weren't just going to leave for anything. So
Sure.
it's not like we looked at a lot of different opportunities. This was something that came up, and then it's just spending the time, talking to the key people involved, whether it was David and Dina, other people at Mackenzie. The Canadian investment universe is pretty small. And so, we talked to a lot of people who were familiar with the team or familiar with the organization. And, it became clear pretty quickly. It's kind of like when we look for investments, some of them become very obvious very quickly that this is the type of company you're looking for. And I'd say that's how we viewed Bluewater when we looked at this opportunity as well.
Can't think of a better segue than to dive into the product itself. You've recently launched the Mackenzie Bluewater Next Gen Growth Fund. Why don't you describe a little bit about the universe of the fund and what the intended objective of the fund is? Maybe I'll turn it to Dave for that.
Sure, I can start with that. I mean, when you think of what this product is, it's really about taking the best of Bluewater, concentrated growth investing, world-class businesses, adding value through stock selection, every company kind of underpinned by strong and growing free cash flow. And our focus is all those things, but also businesses that are innovating by product, by service, by business model. And what you find when you have these characteristics is you can have higher growth rates and with longer duration. And that's something that gets at the heart of adding value and value creation. The other thing, just in terms of the universe and where I really think this product is different and unique, it's innovation investing, but removing the worst parts. So what do we mean by that? No concept stocks, no early stage businesses, no lottery tickets, no companies burning free cash flow. Every company in the portfolio kind of underpinned by strong and growing free cash flow. So, it's really about innovative growth investing that allows you to sleep at night.
It's on the face of it, very interesting. When I think of innovation in general, and you say you don't look for the sort of concept stocks, all that sort of those types of businesses, the focus on free cash flow is interesting. Innovative companies, I think people are entrenched to think of startups. We've just been through a decade of technology companies really dominating with sort of the Silicon Valley mindset. Are those the type of firms that you're looking for, but just a little bit more mature? Or maybe you can double click a little bit on where you're finding these opportunities and what your ideal investment looks like.
Sure. So there really is a large overlap philosophically with the with the investment philosophy that Bluewater's had with their current funds for a long period of time. Global leaders, little competition, and then there's this small subset, this sweet spot that's maybe a little bit higher growth, call it 12 to 25% in free cash flow, which is what we typically are looking for. That a little bit higher in some respects. There is some overlap with the U.S. and global Bluewater mandates that we're involved with, but then there's this small set of companies that's growing a little bit higher than that, but maintains that global dominance and continues to be relevant. And we think going forward will maintain that global leadership through innovation. And this is not just a tech fund. We wanted to dispel that. When we talk about innovation, it can take many different shapes. Innovative products, I think, is the easy one that most people think of. Innovative services. How about innovative business models? Like one of them we think of that may not be come to mind so easily is like a Costco, which has actually been held in the US and global Bluewater mandates for quite a while. They're the only retailer that we can think of that makes most of their profit off their membership fee. And that drives a really interesting mindset from a company perspective, because that makes them fully aligned with their customers to offer their customers the best possible price and to make that offering so compelling that they will pay a fee every year to be part of to have the right, if you will, to go into the store and shop. It's kind of an absurd concept when you think of the rest of the retail space.
Right.
So it's not just certainly when you're talking about innovation, there will be a focus on technology stocks, but it's not just about looking for the latest, greatest, high flying tech product. And what really fits, again, the kind of the overlap between what we're trying to do and what Bluewater's been doing is taking companies that already have lots of free cash flow, already have a solid balance sheet, have already established that they're the best at what they do, instead of hoping and praying that that will be the case down the road.
One of the challenges that I might think you would face when you're looking for those more established companies is the fact that bigger, larger, more mature businesses may get stuck in their ways. They have a business model that works. It's generating a lot of free cash flow. How much of a challenge is that to innovation, and how broad is the universe of companies that actually exhibit those characteristics?
So it's a small list, to be honest. And our process, the last 7 months, it started with sizing up our universe, call it 2,000 companies, 1,000 in the US, 500 in Europe, 500 in Asia. Qualitatively,
sounds like you didn't have a lot of free time on your hands.
No, and it sounds so daunting, but qualitatively looking for avoiding commodities, the mature industries, businesses vulnerable to disruption, looking for those growth rates between 12 and 25%, which we really think is the sweet spot. But then getting to a point where you're doing deep dives on 175 to 200 names. So this was really a process of leveraging the knowledge base across the Bluewater team, finding these monopolies, oligopolies with secular trends behind them, and eventually getting to a point where you have, call it 30, what we believe is just exceptional global leaders that are innovating, again, on those three, product, service, and business model. And what you find is, the duration of growth is much longer when you find businesses with these characteristics.
That's great. You mentioned there are secular trends and secular themes. I'm curious how much that plays into your process and what stage that plays in. Do you identify a secular theme, look for companies, or is it more of a bottom up? Tyler, maybe I'll go to you with that. Given your early background in macro, and how much is that applied to the overall process?
Well, it comes from both, to be honest with you. And when you're looking at we look at everything, for starters, from a bottom-up perspective. But when you do that, you tend to find themes, right? So even when you kind of read the transcripts and go through the quarters of general industrial companies right now, for example, most of those that are tied to the auto industry, and more specifically the EV side of the electric vehicle side of the auto industry, you can see these tailwinds. So, we're starting to see some weakening in the economy in a lot of different general industrial areas, but not if you're tied to that sector. So you see it from the bottom up. And there also is a component of looking at the trends, looking where the world's going. In a lot of cases, we've been hearing about, for example, electric vehicles for a long time, but I think right now it's kind of flying under the radar, actually, as to how quickly it's occurring. When you look from the bottom up at what the automakers that we would probably never want to invest in, the legacy automakers, but it doesn't matter. You look at them and they're going full on into electric vehicle production in the next 3 or 4 years or sooner if they can get there. So it's really both. And it's great to have a global universe to see these trends and then go looking for the best companies. We can benefit from something like electric vehicles without having to go into business models that have not historically, been very profitable or good investments, or by trying to pick companies and betting on a certain type of technology or a certain kind of thing coming through. We look for companies, for example, that are going to benefit no matter which auto OEM wins the EV race. We look for companies that are going to benefit no matter what.
Makes a lot of sense. You referenced EV there as one of the secular trends. Do you have a select number of secular trends that you're after, or are you more ambiguous or able to be more flexible on that?
I think there's some key ones that kind of as Tyler said, I mean, you go through so many names, you read 75 plus transcripts a quarter, these trends come up, you start seeing them from many directions. Electrification and EV, energy transition, you're certainly seeing it everywhere. You're having a platform change, from internal combustion to electric. I think digitization and automation would be another kind of key one for us. Every business now is becoming digital. They're harnessing, analytics and data. And, that's really evolved. It's evolved from, iPhones and e-commerce to the purpose of saving money, saving time, saving lives with the company, the digital, using digital tools for surgeries. AI, automation, all these things are driving trends that really provide the wind at your back for earnings and cash flow which can be 5, 10, 15 years.
You've referenced, Dave, several times, and Tyler as well, long duration growth, long duration cash flow. And I think that many of our listeners, given the inflationary environment and the performance of longer duration growth in general throughout 2022, has been very challenged, to say the least. What's your view on inflation and how it might impact your universe and where you're finding value?
Sure. So maybe I can take that one, given, as you pointed out, my many years ago macro background.
Sure.
But so when you think about the mechanics of valuation, and you think about the kind of companies that Bluewater has invested in historically and that we're trying to invest in, these are companies that kind of keep a durable moat, a durable advantage that can grow higher than the overall market for very long periods of time. So when you think about the math on a valuation perspective from a DCF, for example, you think that a lot of the value in those companies occurs past, call it a 10-year period, because they,
Right.
They maintain that dominance for so long. So it's not surprising from a short-term basis that you see weakness in those stocks when interest rates and inflation goes higher. We like to point out that that's valuation volatility. That's not fundamental volatility. And when you're thinking about the type of companies that we're looking for and the type of companies that we're investing in, you think of limited competition, best in what they do. Dave's mentioned a few times secular tailwinds at your back. Don't these sound like the kind of companies that are going to have an easier time passing through inflation as well? So when
Right.
you think about that, over the longer period of time, we still think that these are companies that are going to have earnings growth better than the market. In some cases, versus the rest of the market, it becomes much easier for them to maintain their earnings growth dominance versus industries that in any environment are going to have a harder time pushing inflation through, let alone the kind of environment that we find ourselves in. So we really try to separate between kind of shorter term valuation driven volatility and, the longer term fundamental outlook that we have for our companies. And, we've been through a few earnings seasons since we've been here. Our companies are doing very well. And we have a lot of confidence that these companies are going to be able to keep up their leadership and be able to pass a lot of pricing pressures through. And eventually that is going to result in higher investment returns as well.
Great. Maybe one last question about sort of companies in the portfolios that you're looking at. One of the things that struck me when you talked about the EV tailwind and some of the other innovative business models is that they're not particularly capital light businesses necessarily. You're tangibly creating something as opposed to a lot of the digital businesses that in order to scale, I think it's like Control C, Control V, and voila, you've scaled. How do you think about that when evaluating the firms and putting on growth projections?
Yeah, maybe I can start with that. I'm sure Tyler will have some views as well. I mean, I think it's important to step back and think about kind of every decade has had a theme. I mean, the 90s, Matt, as you remember, is tech, media, telecom. The 2000s were commodities. 2010s, it's certainly been tech, software, bang. And, it's important to look at what the next 10 years could be. And we're just seeing it from so many directions in terms of this energy transition. You raise a good point that, you have to consider capital intensity. One of the key metrics that Tyler and I think about is how much free cash flow is coming into the business relative to the capital that they have to put to work, which is an easy way to say that is how hard do they have to work to grow? So I think those are key things that we focus on in terms of when we dig in on these business models.
That's great. Appreciate the context on the fund and how you approach investing. Very interesting. Initially, when you decided to launch this product, it seemed counterintuitive as far as timing goes, but going through this discussion makes a lot of sense, and maybe you're even able to launch at a great time, considering where a lot of the stocks have traded lately. It's not often that I have guests on that are podcast addicts like myself. I understand the two of you are. I'd be remiss if I let you go without getting some recommendations on where to listen to podcasts or what you're listening to. Maybe I'll start with you, Dave. What's on top of your list?
So you're right, Matt. We're both avid podcasts guys. It's very seldom that a week goes by where we're not passing on one or two podcasts over text. So there's a few that jump out. Invest Like the Best with Patrick O'Shaughnessy. I think he just does a phenomenal job. One that we've started following recently is Business Breakdowns by Colossus, which does deep dives on companies and finds an expert on them. I mean, there's the Capital Allocators, Business Masters in Business. The other one that jumps out to me, which is Howard Marks, and he came out with one recently called The Memo, which is basically a rehash of his memos. And Tyler and I have read probably almost every one of them going back to the 90s, but we just think so highly of him. So it's great to have it in that format.
How about you, Tyler?
So Dave covered the investment specific podcast. I'll cover kind of non-investment. The first one I like to listen to is called Against the Rules by Michael Lewis. So Michael Lewis, if you think back in the late 80s, he wrote Liar's Poker. It was the first book I read before I started my journey and my career in the investment industry. It was still relevant over a decade later, funny enough. So I just think Michael is a great storyteller. He puts really good content together. I will consume as much content as he will put out there. The second one I would talk about is called Hidden Brain. Hidden Brain is really about understand how the human mind works and how decisions are made and kind of the weird and funny things that people do and why they do them. And not only is it something that's always just been interesting to me on a personal level, but again, as we talked about earlier, it's really important to our businesses, to understand how decisions are made, why they're made, what are your biases, are you aware of them, can you get around them? And so that's one that I listen to almost every week.
David, Tyler, thanks so much for spending time with me today. Really appreciate the conversation.
Thanks very much, Matt. Really appreciate the opportunity.
Thanks, Matt.
The content of this podcast, including facts, views, opinions, and recommendations, is not to be used or construed as investment advice and is not an offer or an invitation to buy or sell any security. The content of this podcast should not be relied upon for any purposes, and Mackenzie Financial Corporation is not responsible for any reliance upon it. This podcast includes forward-looking information that reflects our current expectations or forecasts of future events. Forward-looking information is subject to risks, uncertainties, and assumptions that could cause actual results to differ materially from those expressed herein. Our views are subject to change based on market conditions. Commissions, trailing commissions, management fees, and expenses may be associated with mutual fund investments. Please read the fund facts and prospectus before investing. The indicated rates of returns are historical annual compounded total returns, including changes to unit values and reinvestment of all dividends or distributions, and does not take into account sales, redemptions, distribution, or optional charges or income taxes payable by any security holder that would have reduced returns.